This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show December 28th, 2012. Our time is 8:39 Mountain. Radio show runs 6:30 CHED Edmonton, QR 77 in Calgary. And next week, it will be a brand new year. We will be on CFRB, News Talk 1010 in Toronto. Very excited about it. Of course, you can catch us on the radio, online, on Harold's websites, HESradio.com and RareColoredDiamonds.com, and at your convenience, on demand, via iTunes. Our podcast is on iTunes. The radio show, you can listen to it on any portable device, your iPhone, your iPad, anything that you can put iTunes on, you can listen to our radio show. We're very excited about 2013. We think it's going to be one heck of a year. And we say Happy New Year to all our great listeners who have listened to us for a long, long time. Obviously, as we tape this show, the fiscal cliff. Everyone is talking about it. Obama and the other leaders of the Republicans and Democrats getting together, hopefully trying to put together a deal. If not, at the end of the year, they will go over the fiscal cliff, meaning huge tax increases for a lot of Americans. And on the gold and silver side of things, Harold, if we just sort of bump along sideways until the end of the year, both gold and silver will be positive on the year, as you have said in the past. Obviously, we didn't get the huge gains that we wanted, but in a world where there's so much volatility, we will take those positive gains in a very tumultuous year. It was a very unsettling year, and I don't think 2013 will be any different.
I believe you're 100% right, Randy. I want to wish everybody a very, very happy holidays. I hope you had a great Christmas and Hanukkah, and I hope you have a fabulous New Year. But you're right. The fact is that the markets are all over the place during the Christmas holidays, especially at this point, as stressful as 2012 has been. There's no traders around, so the volume in the markets are extremely light. The moves are exaggerated. You know, gold and silver are trading in a range at this particular point, like they've really done for most of the year. Gold's trading above 1650 at 1655. Basically, there's heavy support in gold at 1620, at 1600, at 1580, and major support at 1520. And it would not shock me to hit any of those numbers over the short term. And even if we did see gold go down to 1520, it wouldn't take away from any bullishness on the market. Silver market, basically the same thing. We're trading in a range at this point. Silver's trading at $30. Down 24 cents on the day. There's support at 30, but we've already broken below that. There's very heavy support at 28.50, and the major support in the market is at $26. Is it possible that we could hit $26 silver? It certainly is, and it wouldn't hurt the formation in silver at all. So basically, gold and silver trading within a range. Platinum also doing the same thing, trading at 1526. Palladium's the only market that is actually held in there very strong. Palladium's over $700, even though it's down a little bit today. You've got the U.S. dollar, which is trading a couple weeks ago at about the 82-cent level. It's back down below 80 cents at 79.63. I do believe we are going to see a very heavily depressed U.S. dollar this year, and the U.S. dollar could actually drop down to below 76 cents or lower, which should push gold and silver prices substantially higher. The oil market actually this week has done extremely well. In fact, we had oil up about $3 this week. We're trading above $91 in oil. We're up another 17 cents, and the Canadian dollar is stronger than the U.S. dollar at this particular point. All the news in the market at this time is about the fiscal cliff. You know, this fiscal cliff, it really, I find hilarious, to be honest with you. These guys all went on vacation. This is supposed to be the worst financial situation that could send the stock market and the world markets reeling on a downward spiral, and these guys are on vacation. I know myself, if I have a slowdown in business or there's any type of indication that business is going to be tough or slow, I never take a vacation, nor do I allow my employees to do the same. We just buckle down and we get the job done. But the government had to go on vacation. They couldn't come up with a deal at this particular point, so they're going to come back Sunday night, and they've got 29 hours in which to hammer out a deal. 29 hours. Why in the world did you go on vacation for a week when this is something that's that important? Because tax rates are going to go up, and they're so petrified about tax rates going up. You know, myself as a businessman, and I'm certain a lot of you out there will agree with me on this, the U.S. government and the U.S. economy is in gigantic trouble. The fact is that incomes are down, retail sales are down, people are not making anywhere near as much money as they used to back in 2007 and 2006, and the country is in dire strait. So the country needs income. And the fact is, like any other business, the U.S. is a business, and they derive their income from tax revenues. So obviously what they want to do is get people working again so they'll pay more taxes so the economy can get out of this funk that it's in. But basically that's not happening. So primarily they're all talking about not raising taxes to the middle class and only taxing the rich. And basically now they're talking with this fiscal cliff situation that they're petrified of tax increases. Well, if the U.S. is a business and they derive their income from tax revenues, why in the world would they not raise taxes to everybody? And the fact is that even though we're going to have to bite the bullet, like we did back in the late 70s and early 80s, when inflation was hitting, they knew the right thing to do back at that point. They knew that they had to reinflate the economy, that they had to raise interest rates, even though that was not a very popular decision at that particular point. But look what happened 2, 3, 4 years later. The country was out of trouble and started flourishing. Stocks went up. The economy was great. That's when President Reagan was in office. So at this point here, when the elections were going on and nobody was talking about raising taxes, you got to sit back and say, how in the world are you going to get out of financial trouble if you don't raise taxes? And looking at it as a businessman, for those that make over $1 million a year, they're going to raise taxes from 36% to 40%. It's a 4% increase. Means on $1 million, it's going to be $40,000. So basically, if that's what's going to help the U.S. economy, if it's going to pay down the debt, if it's going to get people back to work, why in the world do we not bite the bullet and just see that happen? But that's not happening at this point. And looking at this fiscal cliff situation, everybody is going to get a tax increase. So the fact is that if it's that important, and if they're so concerned that it's going to send the economy over this cliff, then why did they take vacation? And why are they leaving themselves 29 hours to work out some type of deal? The fact is they haven't been able to work out a deal at this particular point. The chances are that they probably won't work out a deal. And they'll just kick the can down the road like they do everything else. Let's face it, there hasn't been a budget for the White House or for the federal government in the 4 years that President Obama's been in office. So all in all, I don't see any change positive really coming to the economy. The fact is that it's like a lost soul. It's going absolutely nowhere at this particular point unless they right the ship. So we see 4 more years of very similar patterns in the market to what we've already seen. I'm going to make my predictions go on the first week of the year, and I put an awful lot of work into it because these are extremely confusing times. But I am very confident going into 2013 that we are going to see certain situations happen, and if you're not prepared for those situations, you're going to suffer financially, and there's really no reason for it. You see, we've been brought up in a stock and mutual fund type of mentality, and every market has its time. Let's face it, back in the 90s, when the stock markets were strong, the real estate markets were strong, the economy was strong, life was great at that point. You were making a lot of money in the stock market. Your home prices were going up. You could have literally thrown a dart against the Wall Street Journal and picked a stock that was going to double or triple. But that was the 90s. And the greed of the 90s led to the problems of the next decade, which, again, going into the 2000 and up. And that's what we're starting to see was the greed of the 90s we're starting to pay for now. And now a lot of investors, mostly the middle class, that were making a ton of money back in the 90s have lost all that money because they didn't pay attention and they really don't understand these markets. So the fact is that when 2000 came and 1999 came, that should have been a rude awakening for most people. That's when the dot-com companies plummeted. That's when the NASDAQ fell from 5,000 down to 2,000. The stock markets fell, and everybody woke up finding that they were no longer rich. In fact, many had lost almost everything that they put into those stocks. Then it took 8 years, almost 9 years, for the markets to come back up again. The NASDAQ never came back up. In fact, the NASDAQ hit a high of 5,000 back in 2007, and even now it's only at 2,500, and that's with a decent move in the stock market over the last couple of years. So all in all, it took 8 to 9 years for the market to almost come back to where people were almost at a break even, and then 2008 came. And that's when the mortgage crisis hit and the banking crisis hit. And the stock market fell from 14,000 all the way down to 6,500. And again, everybody got wiped out. Happened in 1999. It happened in 2008. Now, people have gone back to the exact same thing. They put their money back into the same old investments that bankrupted them a few years earlier. So now it's 2013. The stock market's back up to 13,000. People are bullish on the markets again. They think that things are turning around, and now we've got this fiscal cliff situation. Now, you've been in the market from 2008. Not everybody, because most people lost all of their money either in stocks or in real estate. But those that did stay in the market saw their income and their investments come back up. Never back to where they started, but it did make a big chunk in what they lost. And now we're back in another situation where the markets could drop another 20 or 30%. The fact is that we tend to go back into the same scenarios again, and there's just no way in the world that you're ever going to build wealth trading the stock market, because it's not for the small investor anymore. It's not like when we were kids and our fathers and grandfathers told us to put our money in General Motors and Chrysler and those top-notch companies, and one day we'll be able to retire comfortably. Those days are gone. It should have been a rude awakening when General Motors went bankrupt and AIG and Citibank and all of those major companies went under, but it wasn't, because greed is a universal language, and basically people want to make money on their money. Well, you've got to realize at this particular point that scenario is not really available for most people. Interest rates are down to almost zero. The stock markets, if you look at your retirement savings plan, they've done nothing. So the fact is that you take that deduction every year, you put your money into your retirement savings plan, and they do absolutely nothing for you. So all you're doing is putting money into an investment that you're ending up losing on, and the fact is it's not doing the job that it should be doing. At this particular point, you've got to go back into history to realize what is going to work and what isn't. And the fact is that we still have $91 oil. $91 oil. Don't forget, when we started the show back 13 years ago, oil was at $18. Gold was at $250, and silver was at $4. Now, we're talking, even with the markets the way that they are, gold is still trading at $1,650, $1,700 with a high of $1,900. We're not that high off the all-time highs in gold. Silver went from $4 all the way up to $50. And oil went from $18 to $150 till they brought it down in 2008 all the way down into the $50 range again, and now the market's back up to 91. I read a report this morning as I was getting ready to do the show, and not only is the U.S. concerned about the fiscal cliff and the effect it's going to have on the tax market, but there's also a similar situation in the dairy market. They're saying that a gallon of milk, because of situations in the market and something that they're going to have to refer back to, which is a plan back to the 40s, as difficult as it is to believe, it could raise the price of milk to $8 a gallon. $8 a gallon. That's more than double what it is at this particular point. Add that to $91 oil, which I'm very bullish on oil. I think within the next 2 years we're going to see $150 to $200 oil again. Talk about weak currencies. The U.S. dollar is a very weak currency that doesn't buy as much. So there's no doubt. And don't let this year confuse you, because there was so much going on this year, and the metals did not do what we anticipated and many others thought that it would do. I thought that gold was going to go to over $2,000 this year and predicted it would go to $2,200, and it didn't do that. And silver, I thought, would break back above the $50 level, even though, it hit 50 last year, fell back to 26, came back to around the $35, $36 level. We felt that silver was going to make a strong rally going into the end of the year and end off somewhere above $50, and that didn't happen. So basically, I was very disappointed in that, obviously, but we don't control these markets. However, if you look at the overall view of the market at this point here, I have not sold a single ounce of gold that I own, all physical, and I have not sold a single ounce of silver. So nothing in my mind has changed as to which way this economy is going to go. And again, I've traded these markets for well over 30 years. I've been through the inflationary markets of the late 70s and early 80s, and I have experience trading gold and silver and oil and currencies and diamonds and those type of hard assets. And I'm telling you that I have not sold a single bit of my assets as far as gold, silver, diamonds go, or oil. What I own nothing in is paper assets. I own no stocks, no mutual funds, and nothing in a retirement savings plan that resembles anything in paper. Just don't trust the markets anymore. So basically at this point here, even though we didn't hit our numbers this year, the market is still held up and still finished higher than it was last year, and that's still a bullish scenario for gold and silver. In fact, that makes it 12 years in a row that gold and silver have outperformed almost every other asset. And diamonds, certain diamonds, went up 25% this year. You tell me any other asset that has gone up as much as 25% in an asset that there's no risk like diamonds. And we'll talk about that in the second half of the year. So all in all, we're going to talk about our predictions next week on next week's show. Next week, we're going to introduce a brand new radio station for us. It's one of the oldest stations in Toronto, one of the most amazing stations in Toronto, CFRB, and we'll be starting on that the first weekend in January. So we're very, very excited about our future. We think we have a firm grasp on what's going to happen in the economy. It's going to be very cautious. We're not taking any unnecessary risks. We don't do that. We don't over-leverage. We don't take risks, and we don't speculate. Not in markets like this, because one bad move and you could get wiped out. So we're going to make our predictions next week, so I don't want to do it this week and let the cat out of the bag, but I do want to let you know that I'm very positive going into the new year with the investments that we're going to recommend to you and what we believe is going to happen going into 2013. So all in all, it wasn't the year that I anticipated, but the fact is that we're still going to finish up on the year, and that's a positive thing. And I think what we have to look forward to in 2013 is going to be substantial if we're in the right investments. If you don't do anything and you just sit the way you are right now in stocks and mutual funds and keep your RSPs and those type of investments, you're going to suffer. And that's not what we want to see, and that's not the reason for this show. Randy and I have been going on 13 years now. When we first started doing this radio show, there was not a lot of believers in what we thought. In fact, at times we were the laughing stock. Stockbrokers were laughing when we said, sell your stocks and buy gold and silver at these lower levels. And sure enough, look what's turned out to be the greatest of all investments. Gold, silver, oil, diamonds. Every recommendation that we've made over the last 13 years has turned out to be stellar. And again, we're looking forward to giving you recommendations going into the new year. So all in all, again, we're going to end off the year slightly up in gold and silver. The oil market made a huge move this week. Again, the dollar at this point here, we believe is going to continue to fall, and that should push gold and silver prices substantially higher. Again, Randy, that's the way we see things at this point. And again, we'll see what happens next week with the fiscal cliff, but my indication is that they're not going to do a lot. They'll come up with some cheesy deal at the end of the year just to try to say that they did something. But if it was so serious, if they were so concerned that this was going to send the economy into a tailspin, what the hell are they doing going on vacation when they should be back in Washington working and solving this problem? But it shows you where their priorities are. To me, it makes me sick to my stomach.
And if they do not pass that farm bill, which they need to, you're right, Harold, milk will double in price. One thing we are sure of, 100%, the Fed is basically doing all the work. The politicians in the states aren't, and that's why we're going to have another $1 trillion in quantitative easing for 2013. That is hugely positive for hard assets. If they do not get this fiscal cliff situation figured out, it will be a major drag on the U.S. economy. I was listening on my way in to the news, and they were saying for people that were making around $40,000 a year, you're going to end up paying roughly $3,000-$4,000 more in taxes in the United States. You tell me that's not going to be a drag on the economy? Of course it will. Now is the time to have hard assets in your portfolio. Speak with Worldwide Precious Metals. That's the company Harold recommends you use, the only company. Canadian company in business for over 10 years. Connect with them at 1-866-623-2002. Their website is wwpmc.com. Should remind you, we have our free weekly newsletter we send out free of charge via email. And we have new information, all new information again this week. If you're looking for something to read, keep yourself up to date with our World Financial Report. It's the companion to our radio show. Speak with Worldwide, 1-866-623-2002. Their website is wwpmc.com. Speaking of the fiscal cliff, Timothy Geithner, the Treasury Secretary, warns lawmakers, and he did this the other day, the debt standoff risks U.S. default. Also, Harry Reid, the head of the Senate Majority Leader, the Democrat, saying he doesn't think there's enough time to get a budget together and actually solve this problem. One of the other things that I thought was very important this week, you'll find it in the newsletter, it was a quote from Egon von Greyers, and he is a gold expert out of Switzerland, and he says it perfectly, Harold. U.S. debt is increasing by approximately $1.5 trillion per year. If you add that to the increase in the unfunded liabilities, you get an increase only in 2012 of $7 trillion. So that total debt and unfunded liability increased by 2012 by a staggering $7 trillion. If you multiply $7 trillion by 10 years, you get to $70 trillion, and you can see that the whole fiscal cliff debate is about a measly $1.2 trillion over 10 years, against a potential increase in the total debt in the United States of $70 trillion. So it's sad to see this desperate situation where politicians worldwide refuse to face up to the real catastrophic state that the world is in. Instead, they're just tinkering with the edges. And I agree with Egon von Greyers. That's exactly what they're doing. $70 trillion in debt versus $1.2 trillion over the next 10 years that they're talking about cutting off. It is a complete joke. In fact, the United States, their Social Security ran a $47.8 billion deficit in the full year 2012. Disabled workers hit new record highs in December in the United States. What you have is almost 50% of the population in the United States not paying any tax, a lot of people in the situation where they're on disability and just sitting at home and getting money, and there are just not enough people around to support all the social programs. And when they talk about the fiscal cliff, they need to deal with social programs in the United States. One of the top stories we have, and we have a lot of charts in our newsletter this week that are must-read charts. And this week we have all new information, even though it was a quiet week. But John Embry from Sprout Asset Management believes that a catastrophic loss of confidence is going to mean that we're going to get a spike in gold and silver. And he believes that if you do not have your positions in gold and silver yet, now is the time to do so, and do so immediately. Get that article. Speak with Worldwide Precious Metals about investing in hard assets, gold, silver, platinum, palladium. Their website, wwpmc.com, wwpmc.com. Their telephone number, 1-866-623-2002. Going to come back and talk about diamonds. It was a great year for rare colored diamonds, and rarecoloreddiamonds.com. We'll talk about it as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December 28th, 2012. Our time is 9:03 Mountain. Radio show runs 6:30 Chad Edmonton, QR77 Calgary. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. You can listen to us live on the radio. You can listen to us, obviously, online, and we have a podcast as well. You can listen anytime you want on iTunes. Go to iTunes, type in World Financial Report on radio, and you can listen to our radio show on your smartphone, your iPhone, your iPad. It's that simple. We are portable. If you missed a show, that is the best way to connect with us. And we have good news. Starting in 2013, we will be moving to a new station in Toronto, moving to CFRB, News Talk 1010. So starting in the new year, we will be on in Toronto on a new station, CFRB. To connect with Worldwide Precious Metals, the company Harold recommends you use to invest in precious metals, gold, silver, platinum, palladium, call them, 1-866-623-2002. Their website is wwpmc.com. They are the experts in this very specialized field. They are the people to talk to. Give them a call. Let them educate you about investing in gold and silver, platinum, and palladium. on the diamond side of things. Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. Our featured diamond of the week is a 1.18 carat cushion cut fancy intense yellow internally flawless diamond. It is absolutely stunning. And you'll want to speak with Harold about investing in that diamond. You can call Harold at 1-800-432-1022 or go to rarecoloreddiamonds.com. And Harold actually wrote an article for a magazine that's online. You can subscribe to it as well. It's called Luxio. It's out of Denver, Colorado. We have the article and a link to it, all about why you should invest in diamonds. And I know that that is a must-read. We also had a very, very interesting report. I did include it again from last week because it was so important in case you missed it. Bain & Company did a global diamond demand industry report, and they say it's a portrait of growth. If you take a look at the chart that we have in our newsletter, you will see that it's going to be very, very difficult for those trying to get diamonds because rough diamonds will exceed supply through 2020. And we have a very interesting story this week as well about pink diamond behavior and why when we look at a pink diamond, we see pink. And how exactly does that all come about? A very interesting article. But Harold, I encourage people to speak to you about the featured diamond of the week. It's a stunning yellow diamond, similar to the one that Kelly Clarkson got a few weeks ago when she was engaged.
Exactly. That was a very beautiful ring that she got also, and she's a good girl. I like her. Anyways, the diamond market this year was phenomenal. 2012 was another great year. Now, just so you understand that not all diamonds, just because they're a diamond, are considered investment diamonds. They're not. In fact, most diamonds aren't. We recommend 3 different types of diamonds that have track records to our clients. And the thing is that diamonds, as far as my business goes, start at $15,000 and go all the way up into the tens of millions. We have one diamond in particular that's worth over $50 million. So the fact is that you do not need to be a multimillionaire or invest millions of dollars in which to make a lot of money in the diamond market. In fact, the diamonds that we recommend to our clients are nowhere near in the multi-million-dollar range, and these are diamonds that go up 25% every year. And the exciting thing is because we are anticipating that there will be heavy inflation over the next 4 to 5 years, that these diamonds do as well as gold does without any risk. So, just so you know, that the diamonds that we're recommending are in 3 different categories. 2 of them are colored diamonds. 1 of them is a colorless diamond. The first diamonds are the yellow flawless diamonds. They start at $15,000. They have to be the internally flawless. If they have any flaws in them at all, even the VVS1s or the VVS2s, they're not going to go up in value anywhere near to what an internally flawless diamond. So when you buy the very best, you always get the most back for it. Now, there's a lot of different colors of yellows, and most of them are not investment quality. Faint is not an investment quality yellow. Very light is not an investment quality yellow. Light is not an investment quality yellow, but fancy light is. Those are known as canary diamonds. Very popular. That's what Kelly Clarkson just got, and they're a beautiful, soft yellow. Those start at about $15,000 a carat. They go up by 25% a year, every year, except during times of high inflation. In 1979 and 80, those yellow flawless diamonds went up by 500% in 2 years. 500%. You tell me any other asset that goes up that much without any risk. Because colored diamonds like these, the yellow flawlesses, never, ever fall in price. Reason for that? Supply and demand. The demand is extremely high. The supplies are minuscule. Maybe 100 to 120 of these yellow flawless diamonds are available a year, and my partner cuts 85% of those. My partner in this business is a 4th-generation miner and cutter. So there's no middle people between us. They go directly from the mines to his cutting facility in Antwerp, Belgium, polishing in New York, and then I sell those diamonds as investments to my client. So there's no other dealers. There's no middle people. There's no retailers involved. In fact, the way that you make money in the rare colored diamond market is not to buy retail because they mark them up 300 to 400%. We don't. We make our money when you sell, which is the way that it should be, because basically we get 10% of the profit when our clients sell their diamonds through us. We're the only company that owns its own auction business so our clients can resell their diamonds. That's one thing. So the yellow flawless diamonds, the one that you want to own are the canary diamonds, the fancy light yellows. They're in about the $15,000 range. Then you've got the fancy yellow diamonds. Those are a little bit stronger in color. They're about 20 to 25,000. Then you go to the fancy intense yellows, and those are even stronger than the fancy yellows, and those are basically in the 25, 30, 35,000 range. And then you get to the fancy vivid yellows, which is the very best color you can get. They're golden. They're very strong, beautiful golden yellow, and those diamonds trade from 50, 60, 70,000 a carat and up. And basically, all of those diamonds go up by 25% a year. In fact, most of my clients are so disgusted with the returns that they get on their retirement savings plan that they put diamonds away for their retirement. If you were to put $20,000 into a rare colored diamond and $20,000 into a stock portfolio, in 10 years, your $20,000 diamond is going to be worth close to $100,000. Your stock portfolio, who knows what it'll be worth? It'll probably be worth way less than what you put in. So again, it really doesn't matter what the name of the investment is. It's what gives you the best return with the least amount of risk, and that's the yellow flawless diamond market. And if you look on our website, rarecoloreddiamonds.com, rarecolored with a D, diamonds with an S.com, go to the loose diamond section and look at our yellow diamonds. You're going to see the most beautiful yellow diamonds you've ever seen, some of them museum quality pieces, and we have them starting from under a carat to I've got a 30-carat fancy intense yellow flawless diamond for $3 million. That is just the most beautiful diamond that you could ever imagine. 30 carats and flawless, ladies, takes up 3 of your fingers. So I do have diamonds that are 10, 25, and 30 carats also. Most of my clients that invest in diamonds buy diamonds under $100,000, and you can do extremely well just investing $20,000 or $25,000 in the rare colored diamond market. The next diamonds I want to talk to you about is what Randy brought up earlier in the show, which are pink diamonds. 95% of the world's pink diamonds come from one mine, the Argyle mine in Australia. It's owned by a major company, Rio Tinto, one of the 4 major miners of diamonds in the world, and basically that mine controls the pink diamond market because 95% of the world's pink diamonds come from that mine, the Argyle mine in Western Australia. The reason I'm bringing this up is that mine is scheduled to close by 2018, which is only 5 years from now. That means there won't be any more pink diamonds per se. That means that the 200 carats that come out of the Argyle mine will be no longer. And 200 carats, just so you know how much that is, it fills up a champagne glass flute 3/4 of the way. So it's a tiny, tiny market, but these are the most concentrated form of wealth in the world. They're portable, they're private, they never go down in value. They go up by at least 25% a year, but the closer we come to the mine closing down, these diamonds will go up 8 to 10 times what today's prices are. If you bought a $50,000 pink, it could be worth $400,000 to $500,000 in 10 years from now. That's where you want to put your money, in yellow flawless and Argyle pink diamonds. Again, we've been through this situation before with blue diamonds when a similar scenario happened, that a major mine that produced blue diamonds closed down and blue diamonds went up 1,000% in less than 10 years. 1,000%. They went from $200,000 to $2 million a carat. That's what happened when these diamonds dry up. The other diamonds that I want to talk to you about are not colored diamonds. They're colorless diamonds. They're white diamonds that are D in color. Now, if you know anything about white diamonds, D means colorless. It's the best color you can get and by far the most expensive and the rarest. Add that to the fact that these are flawless diamonds. D flawless white diamonds are amongst the most sought-after diamonds in the world. They are negative correlated to the stock market. Means that in 2008, when the stock market dropped by 50%, these diamonds went up by 50%. That means if you had a $1 million stock portfolio and $1 million in D flawless white, the $500,000 that you lost in your stocks, you made up on your D flawless white diamonds. So here's the situation on D flawless whites. First of all, they're very, very, very rare. The ones that you want to own are the D color, flawless in clarity, and either the round brilliance or the rare cuts. Now, my partner cuts 900 carats a year, which represents 85% of the entire D flawless round market between 1 and 5 carats. The reason that I'm bringing this up is that there is a fund that just recently got approved. Funds meaning a mutual fund almost for diamonds. It's the only one that's ever been approved, and it was approved out of Luxembourg, and it got approved not only by the regulators in Europe but also by the banks. And the banks insisted that the diamonds that they wanted to offer were the diamonds that they were most comfortable with, which were 1 to 5 carat, round, brilliant, flawless diamonds. So this fund is going to start in the new year. I've met with them, and they're going to buy the majority of this 900 carats. What I want my clients to do is to own these diamonds prior to the fund buying them, because the prices will go up substantially on these diamonds. And as this fund eats up all of the deflawlesses that are around, the prices will go up by 25 or 50% a year. Again, these funds want to make money, especially this one, because it's the first one ever approved. So again, I urge you to look at your investment portfolio and to look at what your plan is for the new year. If your plan is to stay put, if you're going to stay with stocks and mutual funds and bonds, you're going to be in big trouble, in my opinion. And not only my opinion, people that are much, much smarter than myself. That's a very, very dangerous market with a fiscal cliff, with everything else going on. There's no reason to risk your hard-earned money, especially when you've seen in the last 10 years that you've made nothing in your RSPs anyway. I would look at going a different route at this point. Because, again, to make 25 or 50% on your money nowadays is nearly impossible. And if you were going to be able to make a return like that, it would be under very high-risk situations. It just is not present in diamonds. Diamonds are not risky. Flawless whites never, ever, ever fall in price. They go up by at least 25% a year, but now that the supplies are going to get eaten up, the prices are going to skyrocket. The unfortunate thing is that these are not inexpensive diamonds. To get a 1 carat flawless round, you're talking $60,000, $80,000, $100,000 in that range. A 5 carat flawless round will sell for well over $1 million. We just recently sold a 22 carat round flawless, and that diamond sold for $8 million. So again, I would get into these flawless whites. I've got them starting at a half a carat that are actually very reasonable in price, under $20,000. So you can get involved in the flawless white market while you still can before this fund eats up most of the diamonds. Again, we're going to head into very, very troubling times. I myself personally am a very conservative person, and I'm not a risk taker. I've been in the markets for well over 35 years, and I've seen almost everything happen. And at this particular point, myself, my family, and my clients are remaining very conservative, no risk investments, and a lot of money is going into safe assets like diamonds, gold, and silver. So again, if you believe that we are heading into an inflationary time, you need to own the assets that are going to do the best for you, and that's gold, silver, and diamonds. These diamonds that I just recommended to you, the yellow flawless, the argyle pinks, and the flawless whites, have no risk to them. They never, ever fall in price, and they have a very deliberate and specific track record. So go on our website, rarecoloreddiamonds.com. Go to the loose diamonds section and look at our diamonds. You're going to see red diamonds, the most expensive diamonds in the world. Most people don't even know that red diamonds exist. They start at $2.5 million a carat. Blue diamonds are $2 million a carat for vivid blues. Greens and pinks are next to make those monumental jumps up into the millions of dollars, and these flawless whites, in my opinion, are a no-brainer. I'm very involved in the markets at this point with what's happening in Europe, and that's where most of the money is going. I'm just going to leave you with one other point. Since we started bringing up diamonds to you 7 or 8 years ago, there's been many other companies that have popped up, and like any successful company, they try to copy success, and I have no problems with that. However, the one point that is extremely important is that you need an investment is only an investment when you can sell it. And that's why I built 8 Siegel Fine Auctions. And 8 Siegel Fine Auctions is the only live real-time auction site dedicated to selling rare colored diamonds. That's all that we do in that business. We have clients all over the world, and this is not an eBay type of site. This is a site where you go on, and it's a live auction. We're going to hold an auction once every month. There's not a lot of diamonds around for sale. So it's not something that we can hold every week type of thing. In fact, the diamonds that are up for sale, there's very few of them available. So we're going to have an auction a month. We'll also be auctioning off very rare gold and silver coin sets, and from time to time, emeralds, rubies, and sapphires. But the major focus is for our clients to resell their diamonds. And that's how we make our money. We make 10% of the profit when you sell your diamond through us. If you buy an Argyle Pink for $50,000 and 10 years later sell it for $500,000, we get 10% of the $450,000 profit, and you get all the rest. And isn't that the way it should be? If a financial advisor recommends an investment to you and you profit on it, then he can profit on it too. But if a financial advisor recommends an investment to you that you lose on, you make money on that investment. In the diamond business, we make money when you make money, and that's the way that we're comfortable operating our business. We will be having an auction that we will be announcing when we come back next week. So we will be having an auction for H. Siegel Fine Auctions where we will be offering some outrageous diamonds, some Argyle Pinks, maybe a yellow or two. Some beautiful diamonds will come up for auction starting at the end of January, and we will announce that next week when we start our shows again. So, again, I'm very excited about the new year. I'm so excited what's happening in the diamond business because, again, now everybody is talking about it. I'm on vacation staying at a friend's home up in Ormond Beach, Florida, and the other day on their local news, they talked about diamonds as investment, and this is a tiny little seaside town. So, again, this is what's happening. We brought this to you 7 years ago, just like 12, 13 years ago, we brought to you a gold at $250 and silver at $4. So, again, get ready for a tumultuous year. The next 4 to 5 years are going to be extreme. Interest rates will be low, inflation could be very high, and the markets you want to be in are the markets that respond best to that. Gold, silver, yellow flawless, Argyle Pink, and D flawless diamonds will get you through these difficult times and actually put you into a very strong financial situation, in my opinion.
RareColorDiamonds.com, the website, telephone number 1-800-432-1022, 1-800-432-1022, RareColorDiamonds.com. And we had this story from a few weeks ago in our newsletter. Harold can send it out to you. He was talking about the D flawless. Lawrence Graff, really one of the largest diamond dealers in the world. He bought a 50-carat diamond for the third time at Christie's. The top lot at Christie's December 10th magnificent jewel sale was a 50.01 carats rectangular cut D color, potentially flawless diamond. The item was purchased by Graff for $8.37 million or $167,400 per carat. This is the third time that Graff has purchased the diamond. The diamond was previously sold at Christie's New York to Graff for $4.2 million in 2005. In the 7 years that have passed since the known purchase, the diamond has appreciated 100%. It is not known for how much Graff sold the diamond. This is the third time that I have owned this beautiful diamond, and I am as thrilled today as I was the first time, he said. Diamonds of this exceptional caliber have a life and legacy that carries on beyond us all. And he says, this is one of the finest D-colored diamonds in the world, and I'm delighted to have it back again. Think about it, Harold. Here's a guy, and we have about 6 minutes left in our show here. Here's a guy who has owned this diamond 3 times. You think he has a little confidence in the diamond market? Of course he does.
Oh, you're kidding. He's one of my heroes in the business. Are you kidding? He started with nothing and is a billionaire because of the diamond business. And, I visited many of his stores and I know some of his people, and, they're a top-notch organization. Again, retailers charge 2 to 3 times what we would charge for a similar diamond, but again, they have different expenses than we do. So I'm just so thrilled about what's happening in the diamond business and seeing that most of my clients and my family and friends all own these assets put away for their future. And again, I've never felt more comfortable with a recommendation than in the rare color diamond market. So again, with the uncertainty over the fiscal cliff, with what's going to happen with taxes, with what could happen with the stock markets around the world, you got sovereign debt in Europe that's still a major issue. You got $16 trillion that the U.S. owns that's soon going to be $20 trillion, and all these massive situations going on. Again, we're just small investors. In the whole grand scheme of things, we're not the Warren Buffetts of this world, but we are smart enough to know that we've worked hard throughout our life, we've had some success, and we're not going to let the markets take away our money. There are certain things that you can do to protect yourself, and that's what we talk about on this show. Again, I'm very, very bullish on the metals markets and on diamonds going into 2013. And I think that the more you understand what's happening in diamonds, read about them, and understand the market and what we do, it's an investment that you want to make for yourself and for your family. Now, just one thing. It's not a short-term investment. You don't buy a diamond and sell it the next year. You're not going to make any money on it. You want to hold on to this for 8, 10 years and see the type of returns that you should see on an investment like this. And again, it's the most beautiful and most concentrated form of wealth in the world, rare colored diamonds.
That's the question you need to ask yourself at this point. How did your investments do in 2012 as we're here in the final days of 2012? As we go into 2013, what are you going to do about it? You've worked very, very hard for your money. Is it working hard for you? Speak with rarecoloreddiamonds.com, Harold Siegel, 1-800-432-1022, and Worldwide Precious Metals, diamonds, also gold, silver, platinum, palladium. WWPMC.com to connect with Worldwide Precious Metals. Their telephone number, 1-866-623-2002. For diamonds, rarecoloreddiamonds.com, 1-800-432-1022. And as we close off the show, there's one story I wanted to get to. Robert Fitzwilson was interviewed by King World News. Eric King, great website. Investors, he says, must catch the next massive play to the upside. For investors, among the changes we need to embrace is the need to focus on real assets. It's not a time for diversification across real and financial assets. The data from the late 70s makes that clear. Financial assets will be destroyed at an accelerating pace. In the short term, cash and fixed income can be safe stepping stones, but not for long. As the legal, government, financial, and social firewalls continue to erode, it is also wise to base your allocations and actions on the assumption that none of those even exist. This is going to be a bare-knuckled fight for accumulated wealth, regardless of what form those assets might take. Nothing is off the table. Forces are in need of money, and we will see an increasing pace and creativity when it comes to separating investors, savers, and retirees from their money. Frankly, the more successful among us at wealth accumulation are simply the bigger targets. Real assets have been our focus, particularly energy and precious metals. It's also the focus of the powerful. It would be prudent to follow their lead. I would encourage you to get our free weekly newsletter. We have tons of new information. Get it from Worldwide. We have a weekly newsletter we send out. Get it from Worldwide or get it from Harold, WWPMC.com or rarecoloreddiamonds.com. And Harold, with about a minute left, 2012 is closing. It's been another great year working with you, and I can't wait for 2013.
Me too, Randy, and I feel the same. You're such a professional, and I love doing the show with you. You know, we take our business very, very seriously. While most people are on vacation, we're still working away, and we've never missed a show in 13 years together. So, again, I want to wish everybody a very, very happy and prosperous 2013. We appreciate your loyalty and you listening to us to this point. And again, we will continue to come on as long as you continue to listen. So have a great year. And Randy, I'm looking forward to another great year with you, with the great stations in Canada. And Mark, I want to say very happy holidays to you too. He's our producer of the show and does a phenomenal job for us.
Thank you very much, Harold Siegel. Have a great new year.
My pleasure.
And I know you'll wish everybody a very profitable day.
I definitely do.
Yes, you do.
I wish everybody a very profitable day and a very profitable 2013.
Connect with Harold, rarecoloreddiamonds.com. Telephone number, 1-800-432-1022. Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold and silver, platinum, palladium. WWPMC.com, 1-866-623-2002. Happy New Year. We will talk to you in 2013. That's it. Another edition of the World Financial Report on radio.